Hey guys, welcome back to another episode of Trade with Alpha. Today was incredible and we saw quite a few setups, especially that red to green move by CERU, and that's exactly what I'm going to go over. So let's get right into it. Alright guys, so here's another perfect example of red to green. So I'm just going to zoom in on this chart so you can get a better understanding of how this setup formed. So you can see here, this is 9:30. This is right when the market opened. It opened up at 248. And it had this tick where it went up to 253 but couldn't hold, so it came all the way back down to about 233, bounced off 233, came back up, and this is when you should be watching. Have a look at this. It's crossing the 13 EMA, crossing the 50-day moving average, and it's coming right up there to that mark, and this is what you want to watch out for. So that mark right there just below 250, so 249 is the red to green move. And just like I showed you in the other charts as well, before it hits 249, you want to watch out for this uptrend right here. And you want to put in your limit order for 249, 250, 251. They're all safe areas to buy, guys. It's very predictable. And this happens every morning. Just like I showed you on the other charts as well. It happens over and over again, and every trader is watching out for this. So look what happens. Right from 250, shoots right up, all the way up till 285 before slowly having a pullback. And in this pullback, this is your opportunity to go in for a second run. So I'll just draw a line over here so you guys can see that. So you can see it's building higher lows as well. It's above all of the indicators. Have a look, 13 EMA, 50-day moving average, and the 200-day moving average as well, which means it was very solid. It had the potential to run, and that's what everyone watches out for. So you could have gotten on the break of this 293 as well. However, you do want to keep in mind that $3 is a whole number, and that's why it's going to act as a resistance line. So whenever you see it coming around to 293, that's usually when you have to proceed with caution. In fact, I was watching this at 293, and I said I'm not going to go in until it touches $3 and breaks through $3. Guys, you can put it at 3 or 3.01, but what's important is that it crosses past that $3 mark, because it may just touch 299. It may come back down. You don't want to be a bag holder who's got his shares in at 299 and now you have to sell it off all the way down at 290 simply because it couldn't break that $3 mark. So you'd rather play it safe and minimize your risk and maximize your reward. The way you do that is by waiting till it breaks that 3 mark. Like, let me just show you here. If you went in at 299, you would have got taken in, and then you would have to cut your losses all the way back down at 290. And people do that, and it's unfortunate, but it's because they're not prepared. Like, they're not educated on this, and it's very important to know when to get in and when to exit your position as well. So you can see here, after this touch $3, I actually got in right at 301, and then I had my profit up around 320 because I wanted that 20 cents run. And you should know this, when there's a squeeze and it's coming up to a whole number, watch for that whole number break. I'm telling you, 8 out of 10 times it will break that and it'll shoot right up. Because once it breaks that, guess what? A lot more buying volume is coming in, and that's exactly what you want to watch for. So the break of 3 is when you could get in 301 all the way up to 320. In fact, it ran even higher. It went all the way to 347, touching that 350 mark. And why 347? Well, again, these whole numbers, the half numbers, they're all resistance marks. So the fact that I touched 347 and then came all the way back down to 320 doesn't surprise me because I was prepared for that. I knew that if it does run to 350, it's going to come back down at least to this 13 EMA. So you can see it bounced off the 13 EMA. Had a bit of consolidation, just going sideways. There's a bit of sell-offs over here because people sold up here and then it came back down and people picked up over here as support. Dip buyers, support. Dip buyers are always going to be there. A bit of consolidation, and let's see what happened after that. So this is actually a short signal. So when it crosses underneath the 13 EMA, that's when shorters usually come in. You can see over here at 315, they took a short position and they probably exited around $3. Right when it went below $3, it went to 288, came back above $3. That's when I took my second position, and I did this for a small scalp up to 310. It actually ran to 313, but remember, if you're scalping, it's important. Don't expect too much. Just get your 10 cents and get out of there. So you see a bit of consolidation, which is normal around that $3 mark. The reason this is going sideways is because at that $3 mark, there's a lot of support buyers. There's a lot of dip buyers. They're just trying to get a deal. They're looking at this and they're saying, hey, this was at 350. If I can get at 3, it'll run up to 350 again, which may not be the case. But when people think like that, then they're picking up at points where it may have the potential to run back up. And this is one of them at that $3 mark. So you can see it's building this consolidation right here. And then everyone's watching for the break of 313. There you go. It has the run of 313. And it goes up all the way up till 325 before settling off again. Here we are, 3 p.m., 4 p.m. market close, and there you go. That's pretty much how it ended off for the rest of the day. So I hope this gives you a better understanding of how the red to green move works. And this is your chance to make a lot of profit in the mornings, because when these setups present themselves, a lot of buyers are coming in and the volume's increasing at a fast pace. Now, what does that mean? That means the ask prices are going higher and higher. There's a higher demand. More people are coming in, it's getting more attention, it's showing up on high-day momentum scanners, it's showing up in chat rooms, on forums, where it may be, and everyone's just looking at the stock. So when it's around here, again, I cannot stress this enough, very important, when it's right over here, coming up to its red to green move, you should have your position in, you should have it ready. That way you can capitalize on this. That way you can make your profit. You can walk away from your desk with a smile on your face. And that's why we're here, guys. We're trying to learn these setups because they're profitable, they make you money, and they're consistent while being predictable. All right, so that pretty much wraps up today. If you guys like this video, definitely do leave a like below and also hit that subscribe button. As always, feel free to send me an email at tradewalpha@gmail.com and I'll be more than happy to respond to that. Stay safe, and I'll see you right back here tomorrow.